What is going on to the AMC stock family? In today's video, we are going to take a look at what Charles Payne just said today on Fox News yet again about AMC, and I'm just going to warn you guys, he is very optimistic. So take a listen right here.
All the hedge fund managers are on vacation in the Hamptons this week because, well, you know what? Maybe they won't even hear about it on the financial media, but I'll tell you about it. Those meme stocks, those so-called meme stocks, absolutely rocking. AMC rocking. GameStop rocking. Now, there's some other names floating around there like support.com. It's not exactly the same, but it does have sort of the same theme. A lot of individual retail traders are bidding it up. It's been as high as 43. I think it's 30 right now. So some of these names, with all of them, obviously you want to be careful, but I'm really impressed with those meme names, those ape names that just seem to stand firm.
And now that you've gotten a chance to listen to what he had to say, which in my opinion just translated to he is bullish, I'm bullish, this is a buy and hold for the future. That has been the continuous message all throughout this entire year. And going off of that note, we do have yet another article, yet another due diligence that talks about the one and only Robinhood. Robinhood did IPO on the New York Stock Exchange, but it doesn't just end at that. So Robinhood is very controversial. Why is it controversial? Because we now are getting the official confirmation of an alleged SEC intervention. Now, this is not going to be 100% confirmed, but now we know that the situation is much serious than it's ever been before. The reason for that is because CNBC recently published an article. This was on Monday, August 30th. So let's go ahead and take a listen, because this is very, very serious. So Robinhood tanks after SEC chair tells Barron's that's banning payment for order flow is a possibility. Banning payment for order flow. Order flow is basically the level 2 data that we've talked about somewhat on this channel, and so Citadel is also connected to this level 2 data. It's not just Citadel though. Don't get me wrong, a lot of institutions go to Robinhood to get this level 2 data so that they as the institutions and as the hedge funds can make better financial decisions. It's kind of crazy, but I guess that's just how it works. And so the SEC chairman Gary Gensler told Barron's that it's banning the controversial practice of payment for order flow is on the table. So again, this is all alleged. None of this has been confirmed, but it is also much more serious than it has ever been before. Going on to point number 2. Robinhood has said that if the PFOF model changed, the brokerage and the industry would be able to adapt. Robinhood is already making out some statements saying that, wait a minute, if any type of business model decided to change, that is not going to be a problem because Robinhood and the industry would be able to adapt. Okay, now going on to point number 3. Shares of Robinhood were already lower on Monday after CNBC reported that PayPal is exploring ways to let users trade individual stocks. This is also a very ironic piece of news right here. So PayPal, they are trying to find their own way to have individuals trade stocks. This is coming right after the Robinhood and SEC situation, and I'm not saying that PayPal just did this. If they decide to announce this, they have probably been in the works of this for quite a few months. It's just ironic that they both happen to share the same news on the same exact day. Robinhood decided to go down in share price, whereas PayPal is very up in after hours. Now continuing on, let's continue reading. It doesn't stop there. So shares of Robinhood dropped Monday amid several bouts of bad news for the brokerage app. Robinhood stock fell almost 7% to $43.64 per shares after the SEC chairman Gary Gensler told Barron's that banning the controversial practice of payment for order flow is on the table. And the chart is right here. So Robinhood shares fall on Monday. This is absolutely insane. So this is ticker symbol HOOD. And so going from almost $47 as the high of the day, almost to $43. It actually did go to $43. And the time we have right here, Monday, 3 o'clock, this was very, very close to the after hours. Gensler told the outlet that payment for order flow, which is synonymous to the back-end payment brokerages received for directing clients' trades to market makers, has an inherent conflict of interest. In my opinion, this is very conflicting because in one situation, you have all these institutions going to one platform. And in this case, the platform is going to be Robinhood. And that's how they end up having more beneficiaries for their own company. Because if they know what the people are doing, then that will allow them to make better trading decisions. However, at the same time, who is getting hurt on the other side? We as the retail traders are getting hurt unintentionally, and we don't even know it until news like this starts to come out and we understand, wait a minute, there actually is something called payment for order flow, where institutions and hedge funds and companies actually pay to get a lot of this advanced level 2 data. And so people will know when you buy shares of AMC, when you sell shares of PayPal, when you buy shares of Tesla, or when you sell shares of Apple, etc., etc. And take a listen at this, guys, because this absolutely blew my mind. So the payment for order flow is one of Robinhood's largest revenue sources, and the way the millennial favorite stock trading app is able to provide zero commission trading, meaning that I believe the statistic is Robinhood makes at least 50% of their total revenue just from this one feature. That right there is what completely shocked me, because if they lose this feature of the payment for order flow, then how much better is Robinhood going to do on the balance sheet, on the fundamentals? How are more investors going to start analyzing the stock for the future and have future quarter over quarter expectations and have future yearly expectations? I don't think that it will be that well for Robinhood, because in my opinion, I'm very confused as to how their future business model will work if this feature is no longer here. Now, continuing on with that, the payment for order flow is a controversial practice that has garnered attention from the financial industry regulatory authority and Main Street. And so, for clarification, an SEC spokesperson declined to comment for this story. Gensler has said for months that an outright ban of payment for order flow is among several options the regulator could introduce. This is absolutely shocking, guys. It is becoming more and more real. And at first, no one really believes it. But the news is right here in front of us. And yes, none of this has been confirmed yet. But we have it right over here. Gensler has said for many months that an outright ban, meaning that the complete banning, 100% ban, no more of this. Companies will not be able to go and reach out to these platforms and say, what are the people buying? Are they buying AMC? Are they selling GameStop? Are they buying Tesla? Or are they selling Apple? There will be no more of that. And at first, it doesn't really seem like a big deal. However, once we start going in and looking at the fundamentals of these businesses and we look into the balance sheet of these businesses in the future, that's when we'll start to understand really how much of an effect and to what extent this really did have on a lot of these major institutions and companies. Continuing on, we are almost done. So the SEC has said it will also consider clear and more rigorous brokerage disclosures as another positive alternative. So they're really trying to do whatever they can to help the retail traders. In my opinion, I do believe that it is a battle of the SEC and the retail traders against Robinhood and Citadel. And that leads me to my next point, because I believe that we, as the AMC retail traders, I believe that there's no reason to stress whatsoever, because we have the SEC now on our side, and apparently it has been said that they have always been on our side for months, actually, right here. And it's just now that things are becoming more serious, so therefore, I think there should be less stress within our community. Now, following an epic short squeeze in GameStop stock in January that forced Robinhood to limit trading on certain securities, Robinhood CEO was forced to testify to the United States House Financial Services Committee in February. Legislators criticized payment for order flow for the conflict it has with market makers like Citadel Securities right here. We think payment for order flow is a better deal for our customers versus the old commission structure. It allows investors to invest smaller amounts without having to worry about the cost of commission, Robinhood's CFO said right before its IPO. And Robinhood has said that if the PFOF model changed, the brokerage and the industry will be able to adapt. And last but not least, let's just quickly go over this last paragraph, which states that Robinhood did go public on the Nasdaq last month. Hitting the public markets, it seeks to democratize for amateur investors. Since the debut, shares of Robinhood have had a wild ride. After sinking on the first few days of trading, the company had a meme stock moment when it rallied 50% amid retail investor interest. The stock is also up 24% since the month of August. So with that being said, AMC stock family, I know that was a lot, but at the end of the day, this is the type of news that will make us as AMC research traders have much more conviction. And conviction is what we all need right now, especially when there's due diligence like this, because being well informed is much better than having no information whatsoever. And let me know in the comment section what you guys think of all this news. And with that being said, AMC stock family, thanks again for watching. I'll see you guys next video.